how have you sort of re-engaged the retail customer? What is the value proposition that Equiduct brings to retail in particular? And how have you leveraged the benefits of MiFID for customers?
Yeah, I mean, I think it's an interesting sort of development, and it's really the second stage, if you will, the second act of the story that fragmentation started with. If we go back to 2006, 2007, clearly the first wave of change was the big MTF bonanza, if you will, where the traditional incumbent monopolies were broken down. And you've now got a set of circumstances where, for example, Chi-X is the biggest platform in Europe. Mm-hmm. In many cases, Chi-X is bigger than Deutsche Börse and NYSE Euronext added together. So, it's made a change, it's made a difference. Well, that's all very well and good. Effectively, you've now got, instead of just one place to go for a price, you've got 3, 4, 5 places to go for different prices. And those prices are different. Then you have to think about, well, who can benefit from that? And the people that can benefit are obviously the sophisticated broker-dealers, the sophisticated investment banks, and the people with access to two really critical things. One is to smart routing technology, which allows them to see all those prices and include those prices in their decision trees. But secondly, and actually of critical importance, people that have access to multiple CCPs. Because it's all very well and good that you can find the right price, but you've then got to be able to clear and settle it afterwards. It was quite clear that, in a sense, the MTF revolution, the fragmentation, tended to sort of cut across the market, if you will, in terms of the organizational structures. And I think it was Robert Barnes yesterday spoke eloquently about the fact that in order to be successful at this point, it seems you have to be multinational. I think that the next thing, perhaps the most important thing, however, is that there are, within those individual marketplaces and within the incumbent marketplaces, some real niches of value. Mm-hmm. And those niches of value have, by their own admission, the incumbents have systematically underexploited, have systematically ignored, and in many cases have just taken for granted. Mm-hmm. Now, anybody that takes any business group for granted is always on dodgy ground. And I think we found a way of unlocking that attitude, if you will, by, let's say, for example, NYSE Euronext, to be able to actually get in there and find the value, the pearls of value that have been ignored. And I would say that categorically one of the biggest pearls that's been ignored by that group has been retail. Mm-hmm. It's been retail. I think basically they sort of look upon it almost as a sort of annuity flow for themselves, and therefore it's perfectly acceptable to do such things as move the data center to Basildon. Letters to the Académie Française about that one, I think. It was seen as being perfectly acceptable to just bump prices up against the smaller broker dealers, and at the same time drop prices and increase technology costs for the larger scale players. And then I think the third thing is that retail across Europe now is becoming increasingly electronic, increasingly sophisticated, and the number of technological outages, the number of sorts of things that really don't go particularly well have increased. So there's been, I think, a systematic ignoring of the retail flow, let's say on NYSE Euronext, which, as far as I'm concerned, creates a wonderful opportunity to go in there and to be able to then say to them, right, we can and we do calculate the very best price available. And then we back that up with something which no other platform at this point has. I just correct you, we're actually a regulated market, regulated by Berlin, but we're able then to give a fill at that best price. So my mum, if she was in France, or your mum if she was in France, or increasingly in other markets as well, is now able to get the same price, in fact, in many cases, even a better price than the smartest, most technologically sophisticated high-frequency trader or hedge fund player or institutional player. And that is something which, in a sense, that democratization of the process has become something which has found a very, very useful and, I hope, in due course, very profitable way forward. Retail is about probably between 25 and 28% of Europe. It varies, obviously, geographically. I mean, there's quite a lot of variance, but it's a big slug. And then one of the things about it is it is actually goes all the way through the chain. It does go to settlement, whereas a lot of the professional flow, quote unquote, doesn't go to settlement. You know, most of these guys go home flat each night. My mum actually buys stock and actually sells it, and so that's an opportunity. And we just think that, you know, getting in there and providing that opportunity, taking that opportunity, improving customer service, cutting costs, and allowing people to do things has been a really useful and interesting opportunity for us.
So when your mum trades on this, she gets the VBBO price.
Yep.
So it's the synthetic best bid and offer across all of the markets you track.
Yeah.
So in theory, that's the best price available.
Correct.
And it may not be the absolute minimum or the closest spread, because it just basically tracks what is on the market. So if there's spread leeway on the underlying market, you'll have the same. So you won't have price improvement on the market.
There's no price improvement.
Exactly.
That's not.
But it's the best.
It's the best.
So why is it that you don't have a larger market share?
Great question. There's a number of reasons. I mean, one reason, quite simply, is that it's a very slow process to sort out the clearing and settlement side of things. As I said earlier on, we actually go the whole way through the system. A lot of people, go home flat at the end of the night. That means that effectively we've got to be connected to the same CCP as, for example, in France, LCH SA. That's fine. We've got that in place.
So which CCPs do you use?
Well, this is the exact issue.
Okay.
For example, with Italy, we want to do Italy. There's a lot of demand in Italy. There's a lot of dissatisfaction with the current incumbent providers. There is a lot of fragmentation in the Italian market, and there's a very, very active retail sector. So we want to do Italy. Let me think who we have to apply to do Italy. Oh, we've got to ask CC&G. Who owns CC&G? Oh, right. If I was to tell you that it's taken us nearly 2.5 years to get them to the table, that's a very, very expensive, slow process. So there's an enormous amount of foot dragging and making it difficult. Let's say that the same happens in other markets, and it does. I don't want to go through the list, but you can easily work out who those guys are. So that's one.
So why adopt a CCP model? Why not? So we heard from Vega Chai they use BNP to do clearing, so have a bank intermediating it, or is the problem that the banks are also your competitors because they offer the same synthetic?
No, it's not. It goes right back into the depths and the heart and the sort of wiring, if you will, of the retail brokerage community. Until we came along, retail was pretty much hardwired into the incumbent market. So the broker-dealer would have its own network of collecting orders, but then it would have a cable that went into Euronext. Right. And it would have another cable that went into LCH SA. And that's how it did its business. So if we are to try and take some of the flow at the front end, which we've been relatively modestly successful at doing, we were today bigger than BATS. We weren't bigger than BATS Chi-X, but we were bigger than BATS in France. I mean, we're regularly bigger than BATS Chi-X in some of the leading names. Retail names, Alcatel-Lucent, some of these big stocks. But the point is that the back end of some of these brokers can't change. It can't do, a different workflow for the stuff it has to do on Euronext and the stuff it might want to do on us. So we are tied to the fact that there is no effective interoperability, and we're tied to the fact that the level of technological investment in the smaller market players is relatively behind the curve.
Okay, well, I'll ask you another question, but if Luca can come up, please, from TLX. While he's coming up, how do you think anything will get fixed as a result of MiFID II? Because, the clearing arrangements should become more mandatory, less voluntary, like you're experiencing with CC&G. Do you think that's going to improve things?
Yeah, I think, as I said yesterday, and I don't want to sort of bore people by repeating it, but I do have very, I'm afraid, old-fashioned, somewhat cynical views on the advantages of MiFID II. I think it's just really effectively another form of talking shop to put off again. To paraphrase the politicians and the commentators, it's just an opportunity for them to kick the can along the road again. Okay. They haven't done, very, very simply, they haven't done what they could have done or should have done, and I would argue should have done, about best execution. They've taken the definition of best execution from 467 words to 666, introduced so many different clauses and passive opportunities to be able to get out of it, that there's absolutely now no way that best execution, which, I think all of us, I can't remember the actual description of that Richard Balakis uses, but it's something like best execution and pornography. I don't want to describe it, but sure as hell I know what it is. I mean, they've missed that opportunity, and that's what. That's, I think, something that's going to prove to be fairly difficult for the market over the next 2 or 3 years to get its head around.
Okay. Luca, welcome. TLX, predominantly a retail market, or almost majority retail market. What exactly are the types of retail customers that you're trying to engage with? And I think you've been doing some research recently on the kind of attitudes of retail customers towards markets, and maybe you could comment on that.
Well, okay, when we talk about retail investor, it's a very wide range. On one end, you have the buy and hold investor, like, I don't know, my father. He studies the financial newspaper every day, and then at the end, he takes his investment decision and buys bonds from Argentina or Iceland or Lehman Brothers.
But does he buy them through TLX?
But he should. On the other hand, you have, the heavy traders. It's a quite small community sharing information on their websites and blogs, and there are those that are actually pissing off our market makers and driving crazy our market surveillance. But this is part of the game. But the interesting thing is when we talk about fixed income and the fact that this world has not such a big media coverage and such a big understanding in the public opinion, there's also a sort of a scientific proof about that. Professor Motterlini, he works at the University of San Raffaele in Milano. He takes part of the, let's say, branch of neuroeconomics. And he's been using, the technique has quite a difficult name. It's functional magnetic resonance imaging, right, which means they're actually scanning the brain of the typical man on the street, so not someone who's used to handle securities. Right. And they look what part of the brains are activated when they're thinking of equities and when they're thinking of bonds. And the funny thing is that when you think about equities, the same areas of your brain that get activated are the same that are involved when you think about food and you think about sex. And the ones that are activated when you think about bonds are the ones related to fear and anxiety. So
this is very interesting. What kind of sample did he take?
Sorry?
What kind of sample?
It was a pool of readers of the Sole 24 Ore, so financial newspaper.
So you're targeting these different retail investors. Some you're not talking to the ones that are thinking about sex and food, but you're talking to the ones thinking about fear. So how can you encourage people who are worried about investing on your market to actually participate in your market?
Well, I think that investor education is the main tool. I mean, we are doing huge efforts on investor education. For each traded bond, we are writing term sheets, fact sheets, let's say, in 2 or 3 pages. We try to explain in a very easy to understand language all the risks and the feature of each single bond. And having in mind not the heavy trader, but my father. Then he will still buy Parmalat bonds, but at his fault, let's say.
And how do you maintain liquidity in these securities?
Our market model is hybrid, so it's order-driven with at least one liquidity provider, because there are asset classes like government bonds where liquidity is already there, you don't need market makers. But for structured bonds, there is a need for at least a base liquidity. Mm-hmm. So the model is working very well.
Maybe, Gabriel, if you can come up. While Gabriel Kitua is the CEO of the Dar es Salaam Stock Exchange, while he's coming up, I can ask you, so you've got a hybrid, quote, order-driven system. How do you encourage the market makers to actually participate in supporting the products that they do? Well,
market makers have a very favorable fee schedule compared to the brokers, so they can access this liquidity pool in quite a favorable way. And the flows are very well mixed, very well balanced. We calculate a ratio which is called cross ratio, where we show how many trades are executed between 2 agency flows and between agency flows and market makers. And the cross ratio is 50%, so it's perfectly balanced. It varies from asset classes to asset classes. But
Gabriel, welcome to the panel. Tanzania, quite a different market, but still a lot of interest from retail investors. What type of retail investors get involved in the Dar es Salaam market?
We have, first of all, I should say that we have both institutional investors and retail investors. On institutional investors, we have both local and foreign portfolio investors. And when we're talking of retail investors, the local ones, these are the typical individuals, the employees, the small business people, and students and farmers that actually have a little saving they would spare for some time to earn a dividend or to sell when actually they need to balance their cash requirements. These are the people actually who, as I noted yesterday and today, might have slightly difference in terms of the appetite to stay in the market or to move in the market. We have around 0.5% of the population in our CDS account, but only 5% trade annually. So most of them actually tend to buy and forget and just wait for a dividend check. And the challenge that I think we are having are both two-way, to increase the number because, as I said, only 0.5% of the population actually are participating in the market, but also to kind of educate them on how they can also maximize their benefit by switching from one portfolio to the other, and in the way creating more liquidity in the market.
So how are you improving financial literacy in Tanzania to help this?
Yeah, we have different approaches, and I should say some of those are also directed to potential issuers because those are when there are new listings, they also bring many new investors in the market. We participate in all crowd pooling activities at the national level, say exhibitions or any gathering that actually pull thousands of people out. So we go there for exhibition, we dish out leaflets, we answer the critical questions or anxieties of people. We participate in the media, electronic, print media, in different occasions. We tend to clarify issues, and actually we sometimes host very expensive programs just to make sure that during the peak hours or the good hours, people can get a message of how they can benefit from participating in the capital markets. But we also have one-to-one, and these are basically more on issuers. We tend to organize in sometimes it can't be very frequent, but we have organized more than 6 times meetings where we put together all companies with potential for listing and try to demystify the listing aspect, and also to try to get them along the process and ask them, tell them the advantage of marketing the IPOs when they come to the market. And normally, when there are IPOs, and if a company really invests a little bit on the promotion aspect, they also assist a lot in bringing new investors into the capital markets, and for that matter, some kind of activity in the market. We are right now looking into. We are engaging. We have an advocacy program with the government. We are engaging with the government to try to have in the secondary schools a curricula, some kind of a subject on investments, long-term investments. It hasn't taken off, but the reception is good, and we hope actually one day we might be able to start to inculcate the saving culture from that lower level. But we already have investment clubs in universities, and actually, we host different classes. They come to the exchange. They are very fond of seeing how brokers are trading in the electronic platform and how money is being made. And so we invite them, and we expect that when they go back, they also spread the message to those their colleagues. And basically, those are the programs that we do. Yeah.
Peter, how important is immediacy to a retail investor? I mean, you have got the backing of your 2 market makers, therefore there is more or less a guaranteed point in any time, as long as there's something going on in the underlying order books that somebody is going to be able to trade on your market. How relevant is that to your sales proposition?
Immediacy is important because I think everybody's looked at markets and looked at order books and seen a good price that they wanted to hit or a good price they wanted to take, and then a moment later when their order went through, they didn't get that price. As an old chairman of mine once said to me when I phoned him up and bitched and moaned for a long time about the execution that one of his brokers had given me. He said, well, it's just, you've got to understand, old boy, that there are 2 prices. There's the good price and there's a not so good price. And today you've got the not so good price. Well, yeah, I mean, he was absolutely right. But from the point of view of a retail investor, you can't explain that to them. They see the price, they can look at the market tapes, and they do. They're very, very keen on analysing this sort of stuff. So it is important to be able to give them that price. But, and this is a vitally important but, you don't need to give them that in sub-millisecond time. Anything in sub-second time is very, very acceptable. And in fact, I think that one of the things you definitely do see is that in general, retail order sizes are growing across Europe at this point. In general, the number of transactions per customer as well that the retail brokers that use us report is also growing, and that they are themselves acquiring customers. So if our customers are doing well, it's because their customers are doing well, and that's kind of like a virtuous circle. So we're very excited about that. We've got another very, very large French shop coming live in the next quarter, which I think will be that tipping point, effectively, if you will, for a lot more activity.
So, and the immediacy is achieved by the VBBO being hittable.
Exactly. Yes. Okay. Exactly. And that's the attractive thing, that they don't have to send their order, or we don't send their order to, if there's 500 shares on one venue and 500 shares on another venue, we don't split those two and send it off. We just say, right, the calculated effect of this, absent any time lags and absent any charges or anything else, the calculated price is this. And what's more, sir, it's not in 1,000 shares or 10,000 shares as an indication. Yeah. You want to trade 1,204 shares, sir, I'll tell you exactly how you're going to do that the best way. Okay. Now, one of the ways of thinking about that is, well, what would happen if you just sent all your business to, let's say, Euronext? And the breakdown of that is really very impressive. if you sent all your retail business to Euronext, and let's just, for ease of argument, say your orders were greater than 50,000 euros, not very many are, but a sizable proportion are, do you know what? 90% of the time, you're getting a worse price by doing that than you are by splitting it up amongst different institutions. Yeah. If you go down to standard retail size, it's about 25–30% of the time you get a worse price if you just go to Euronext. Yeah. Put the other way around, if you come to Equiduct, you get a better price, or you get the matched price, the same price, 100% of the time. Yeah. So what do you want to do? I mean, you get a single fill. And you get a single fill, so that's one that goes through, all your settlement stuff and all the rest of it. So it's very, very clean and neat and tidy. And I think that's becoming increasingly understood and increasingly accepted.
So Luca, in TLX, how does the market model? I mean, basically you're competing against RFQ networks and other dealer-driven systems. How do you manage to secure volume against those? And what is the value proposition against an RFQ network?
Well, actually, in Italy, you don't have so many of these models. This is maybe more linked to the German world or other countries where there's fixed income activity. In Italy, you have more models more closely linked to the, let's say, equity world. The idea was to try to replicate the equity models. Also, Borsa Italiana is an order-driven model. We put also a market maker on it because we have many more bonds with many more different types of logics and trends. So this is the way to be sure of that.
And what's the competitive advantage of TLX for retail against Borsa Italiana?
Well, the wide range of instruments. So it's a much higher range. It's more than 4,000 bonds. It's in 16 different currencies and all types, from govies of 25 different countries to corporate bonds, covered bonds, asset-backed securities,
no
banking bonds. And they are, for example, Italy is the country where the banking system mostly rely upon the issuance of bonds for the funding needs, 38%. And these are almost all placed to retail investors. So the banks issued by, the bonds issued by banks and placed on the network, they are a huge number. Only in Italy, there are more than 20,000. We have approximately 1,500 of these. And they have different trends. They are much less liquid. They have a much less minor issuing amount. So hybrid market model is the best way to tackle this.
Gabriel, the East African community, 5 countries trying to integrate. What's that going to do for liquidity on your market? And given you've spent a day and a half hearing about all the problems that we've created by integration, do you have any fears about what we've done and what you shouldn't do?
Yeah, thank you. I don't have a fear at all on integration. What we've been talking recently was to integrate through automation to facilitate flow of transactions across the border without actually collapsing the national entities. Initially, there was that idea that actually we can collapse, we can merge. And somehow I think the recent lessons, we noted that actually we might need to have the local institutions to carry on the message of savings so that we can tap more savings from the people. And then when the market mature, if there is a business case for merging, and actually we just got very good lessons yesterday and today, that actually we need to, we might be riding on it at a different time zone. Then actually a business case should dictate on the future. What I should say on liquidity, the 5 countries will create a population of 80 million. That is almost double the population of my country. And once we are done with the, for now, the exchanges have already agreed on how we can link the central depository systems. But again, we have to wait for the central banks to integrate the payment cycle because actually it takes both the securities and the cash side. But once that is done, we are going to see an inflow of liquidity kind of balancing the opportunities for high yields across the region. So when investors feel like actually they can offset some low yields in their local market, they can actually put some of the funds in the other market. The only thing that I know that will also be like the current trend that we're having for foreign portfolio investors, that sometimes you might find the liquidity moving on your way and then sometimes moving out of view. But all in all, once we increase the number of securities in the market, we hope that actually we'll have some kind of balancing effect, because there's some security face some low yields, some will be facing good yields. So the switching will also not only take place across the region or across countries, but also within the exchange. But definitely we're going to see an increased volumes of investors, because actually what will happen is that immediately we'll have double population and double potential for retail investors than the current situation. So that is a positive thing.
Excellent. Do we have any questions on this retail topic? Oh, it's all off, isn't it? Yeah.
Yes, Olof Neilig from Burgundy. This is, I think, for Peter, Randall, but perhaps also for Luca. I'm curious, you are facing a lot of competition preventing stuff under the hood with your clients. Are you doing anything with the regulators to accelerate that? I mean, it sounds like your product offering is superb, but many of your prospective banks are unable to use it for various reasons. What can you do to accelerate that process?
Yeah, I think that's a great question, Olof. Thank you for that. Certainly, those of you who are familiar with the European landscape will have heard of and know probably intimately and possibly even too well the changes which have taken place at ESMA recently. ESMA went from being, I think it was CESA before, which was effectively a lunch club for regulators, into being a lunch club for regulators with teeth. Not only has it got teeth, but if it and when it makes decisions, it's not currently formulated as I understand it. You can't even appeal any of their decisions to the courts. So it's a fairly powerful body. As a result of quite a lot of our activities, we've certainly been coming up against competition from Euronext, and Euronext have certainly been spending a lot of time with the regulators, saying that they think that our model is not kosher, it doesn't comply with MiFID and all the rest of it. We've had that back from our clients, because Euronext have been calling on our clients saying that our model is illegal and all sorts of dreadful things like that. I understand, I don't yet know what the result is, but I'm highly confident that when the result does come out, that ESMA will say it is kosher, it is legitimate. And I think that those sorts of things, those very small victories, the ability to actually say, yeah, we know it's right, the market knows it's right, the professionals know it's right, but having the sort of the badge, the stamp, the medallion, if you will, is quite important. And I do think that the distinction that is often made in the wholesale market needs to be very, very radically changed in the retail market. In the wholesale market, it's perfectly possible through things like FESI and through the successor entitled to people like Liber to be able to sort of lobby and cause a lot of trouble in Brussels. And I think that certainly FESI has been exceptionally successful at that. But you know what? In retail, it's very, very different. And I'll tell you why it's very, very different. It's because my mum votes. And my mum votes for individual MEPs. And individual MEPs have become very, very sensitive to the size of their postbags. And when my mum writes, as in fact increasingly there are now lobbying organisations across Europe dedicated to turning out retail anger, when my mum writes to legislators, that gets an enormous amount more attention a lot quicker than when FESI or Liber or whoever else go in and see the Commission. So actually, there is a lot of leverage that we can use, and I think certainly in the last 12 months, 18 months or so, that the success or otherwise of FESI, the success or otherwise of the investment banks in making sure that MiFID II is as watered down as possible, has been absolutely, in a way, wrong-footed by the increasing understanding of, guess who? The consumer protection people. The consumer protection people in Brussels are very upset about the fact that without free and fair exchange of information, without free and fair opportunity to access data, etc., 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 retail investors, i.e. voters, are being disadvantaged. So changing the battlefield, if you will, is proving, and I think will prove to be a very successful strategy at this point, and not a strategy that the investment banks or FESI themselves can employ, because I mean, you know, despite their power, nobody at Goldman Sachs has a vote when it comes to you know, the MEP, apart from their personal votes, of course.
I think you had one.
I do have one question. Yeah, I mean, I'm going to ask this on behalf of the room, actually, Luca, and I want you to ask your professor the next time you meet with him. It's a very simple question. That if I, based on what you said earlier, if I buy my wife some equity and take her out for dinner, will that change her views on sex?
Okay, well, on that note, maybe we should have some tea. But I would like to make one final comment on what we just discussed. MiFID II has some content in it about saying that exchanges are going to have to provide information on execution quality. You have here with Equiduct the only exchange that does that today. So it's interesting how other exchanges have got such significant volume and sticky liquidity without that metric. But it is an interesting point that Equiduct hasn't attracted more volume, but it is growing. Yet. But anyway, thank you very much, and we look forward to seeing you after the break. If we start at, we're running 10 minutes late. If we start at 20 past, then we've got the final sessions. And we're back talking about risk monitoring meets compliance monitoring, and then a couple of other topics. Thank you very much.